Global natural gas markets are entering a new phase of divergence, shaped by shifting demand patterns, tighter balances in the United States, and the rapid expansion of LNG on the global stage. To see what's driving prices today and what the outlook looks like for 2026, I'm joined by Isabela Garcia, market intelligence analyst at StoneX and the author of the upcoming StoneX Market Intelligence Quarterly Global Natural Gas Report. Welcome, Isabela. Great to have you on.
Hi, hello, thank you.
So last year, we saw natural gas prices move in very different directions across regions. What was driving that split?
Yes, exactly. Normally, natural gas prices tend to recover in the last quarter due to falling temperatures in Europe and North America. But at the end of that year, last year, we observed a different movement, and Hub recorded a sharper increase, especially between October and November, when it was traded above $5 per million BTU, which was the highest price since 2022, while prices in Europe remain more contained. In general, the rise in the United States was linked to colder temperatures, but this was compounded by stronger liquefied natural gas flows, as U.S. LNG exports expanded through 2025 due to increased liquefaction capacity. In Europe and Asia, prices remain more subdued and even declined given the ample availability of natural gas influenced by the increased volumes of LNG on the international market, despite the seasonal uptick in demand.
Okay. Also, in your report, you highlight a tighter U.S. gas balance despite rising production. How do you explain that?
Well, in 2025, natural gas inventories started the year lower due to a harsher winter than in the previous seasons compared with 2023 and 2024, for example. This helped the prices keep higher than in the previous 2 years. And on the one hand, that led to more restrained demand in sectors such as power generation, but on the other hand, it supported the recovery of production. However, even through the year, price remained higher because of LNG exports increased during the year, reducing the volume available for the domestic U.S. market. According to the Department of Energy of the United States, the LNG exports rose 23% in 2025 through January and October, and the expectations are that this number will continue to grow in 2026.
Yeah, I mean, LNG exports seem to be playing a key role in the growing gap between the US and European gas prices. How is LNG reshaping global gas flows?
Well, we go back to 2022 because with the start of the war between Russia and Ukraine, the European market had to seek new gas suppliers, putting pressure on the LNG market since 2022 and increased competition with Asia, where gas demand has been rising rapidly alongside economic and industrial growth. In this context, several countries expanded their LNG export capacity, particularly the United States, but also Qatar and Australia. The greatest highlight is indeed the US, which increased export capacity by 23 billion cubic feet per day last year, and it is expected to continue doing so, with exports rising again like 25% along 2025. With greater LNG supply, European prices remained more contained last year. European countries became increasingly dependent on US cargoes, while a growing volume of Russian gas shifted toward Asia, especially China. In summary, there has been an increase in US exports to Europe, alongside with shipments from Africa and the Middle East. Meanwhile, Asia, despite a decline in demand, continues to import LNG, but now with Russia as a major supplier, particularly to China. Overall, 2025 was a year of a more balanced gas market across regions, especially in the second half of the year.
Yeah, and if we circle back to Asia, I mean, last year we saw Asia's weakest demand growth since 2022, yet 2026 is shaping up to be a little bit more positive. What's changing this year, do you think?
The main factor behind the decline in Asian consumption last year was the price. Despite the increase of LNG supply, average benchmark prices often remain higher than 2024 levels due to stress in the market earlier in the year. As I mentioned, the colder winter in North America and Europe put pressure on inventories, and as a result of higher natural gas prices in Asia, other energy sources such as renewables and coal end up limiting natural gas demand growth, especially in India and China. For 2026, expectations point to a more attractive prices supported by rising global LNG exports and continued Russian flows to China. Of course, in the beginning of the year, prices tend to be less attractive due to the winter, as we see now. But for the remainder of the year, economic growth, particularly in industry, is expected to support gas consumption in Asia. Growth in the electricity sector and electricity demand will also be an important driver, although gas will continue to face competition from other energy sources, as I mentioned earlier.
Okay, and one last question, Isabela, before we let you go. What should investors and market participants be keeping an eye on in the global gas markets this year?
Yes, well, the thing for gas is that the well-defined seasonality of the gas demand creates distinct market moments through the year. Like I said, in beginning of this year, particularly the first quarter, the gas demand growth in the US and Europe is keeping prices elevated and inventories tighter. Early January, for example, brought colder than expected weather fronts, contributing to strong prices rebound during the month. And inventory levels at the end of the winter season will be the key to determine the price dynamics for the rest of the year. However, the prices are expected to ease with the arrival of spring as demand declines and rising production helps rebalance the market and rebuild inventories. The LNG market is particularly noteworthy in helping keep balance both in Asia and Europe more less constrained. Another highlight is the rising production in Latin America, led by Brazil and Argentina. For the United States, we'll see probably a different trend from Europe and Asia, as I mean by higher prices. That's because the trend that we saw during 2025 will likely continue in 2026. What I mean by that is that production will keep growing, but exports in the form of LNG will keep growing at a higher rate. And the demand in the States will likely grow as well, driven especially by residential demand for heating, but also some other sectors like the electricity generation will grow more in 2026, especially from the upcoming demand from data centers. So yeah, we see these different trends for 2026 that will be more clear for us as the end of the winter season that will establish the level of inventories across the world and understand the price dynamics by the spring.
Isabela, thank you so much for all those insights. And thank you to our viewers for watching. For deeper insights and analysis, scan the QR code or click the link in the description to download StoneX's Market Intelligence Quarterly Report.